Hello and welcome to the Weekend Investing Daily Byte. We are shooting this on 13th of July, and what a day it was. Nifty hitting an all-time high and then giving up all the gains and the gap opening gains by the close. We will talk about the dollar index in this episode, how the dollar index is collapsing, and what that means for emerging market equities, what that means for precious metals, how has these two performed when the dollar index has been falling in the past. We'll look at all that in the second half of the session. But first, a look at the market today. So Nifty, as you can see in the chart, opened very, very strongly with a gap up this morning. This is despite having a waterfall kind of a move in the last afternoon. So we had a great fall on Wednesday afternoon, but then Thursday morning we are opening at an extremely great gap, with the overnight cues being that the US CPI was lower than what was anticipated, and hence there is talk and expectation that rate hikes may not happen going forward, at least for some time, and that gives relief to the market. So Nifty also opening up strongly given that backdrop, but then second half of the day the entire gains collapse on itself, and the gaps that have been created in the morning also get filled up. Overall, if you see, I mean, there's nothing that has really gone bad. We've just lost the morning gains, not such a big deal. But yes, it was a bit probably difficult for intraday players. Nifty Heat Map, you can see TCS and Infosys going up dramatically at 2.5% each. This is after TCS reported almost a flat sort of a result. So it means that the market was even expecting a weaker result. So given the fact that TCS has put in a flat result and market has gone up, probably means there's not too much downside now left for IT stocks unless some really bad news comes through here. Also, we have seen that Nasdaq is going up, and S&P 500 stocks are also at almost a year and a half high. So that market is also priming up, which has a very direct implication for IT stocks at least. Reliance, State Bank, Levers, Maruti, NTPC Power Grid. These were some of the names that gave up some gains. ICICI Bank, Axis Bank, Bajaj Finserv, HDFC Bank were the gainers, and there were some gains in LTIM and Grasim as well. Oh, sorry, Grasim was down. Aditya Birla was up today. Sectoral overview: two main sector rotations today. PSU banks down by 2.4%, so that's a pretty sharp fall. This after our own CPI came in higher than expected, so maybe that has pushed back the expectation of any rate cut later in the year. Maybe the rate cuts are out for 2023, and that may be one reason of some sell-off if we want to look for reasons. Public sector enterprise stocks also falling 1.5%, energy stocks down 1.4%, and plethora of other sectors down between 0.5% and 1%. What was gaining? Real estate gained 1% again. So real estate is now up 25.5% over the last 3 months. Over the last 12 months also up 25%, the biggest sector gain of the ones that we track. IT stocks up 1.8%, the strongest sector of the day, ending the last 3 months at 4.5%. But nevertheless, the fall in IT stocks seem to have abated now. Mid caps and small caps were the ones which saw a slightly different trend than most previous days. We had a very sharp fall in mid cap 100 index, which basically consumed the last 2 or 3 days of gain here, and the small caps also dropped very sharply, coming back to the high that broke 3 days back. So some gains given up, yes, after a rally of sorts that we've had from March end. You can expect, if we've gone up 40% in some stocks, 30% in some stocks, 20% on the index, you can expect 5-7% to give away. 1/3 of the gains after a good leg up is always at par for the course for giving up. Nifty Bank has given up actually most of the gains since the breakout, which is a bit not so strong indication. But as long as it holds out the breakout level, I think we are still good for attempting a new leg up. But if this breaks down, then I think all chips are off for a new high, and then we are back to the range dredging days. In this channel of 43,400 to 44,400. So let's see how this goes. Nifty Bank, I've been repeatedly saying, is going to be the leading indicator of where the market goes. If Nifty Bank goes down, forget about Nifty going up. It will not happen. Coming to the US dollar index now, let's take a longer chart first. So this is the US dollar index. Now, what is the US dollar index? US dollar index is basically an index which was created in 1973 to reflect the relative strength of US dollar versus a basket of currencies. Like in those days, it used to be the German mark, the French franc, Japanese yen, British pound, I think Swedish currency, and then I think one or two more. But once the euro came in, euro became the predominant weight in the basket of currencies. I think about 54 or 55%. Then you have yen, you have the Swiss franc, and you have the Swedish kroner, and there is one or two more currencies. There are six currencies, if I am not mistaken. Let me just quickly check this if I have it here. Oh, sorry, I don't have that ready available, but there are about six currencies against which this is calculated. So as per each weight of each currency, a number is the weight is given, and the currency forex level is input into that formula to give this number. So the base is 100. So when US dollar index, which is also called the DXY, is at 100, means that the dollar is relatively at par with the rest of the basket of currencies. When the dollar is at 120, it means the dollar is substantially stronger than those currencies right now. When the dollar is at 80, it means that the dollar is relatively undervalued versus other currencies. This is all that is there to the dollar index. Now, this 40, 50-year chart that you can see that it varies from extreme levels of 70, 75 on the downside. On the higher side, it has even gone to 160 levels in 1984, 85, when Paul Volcker tightened the interest rates in the US markets, and everything was gushing towards the US at that point of time. So what has happened in the recent past is that the dollar index has been rising since 2008. The fact that whenever the dollar index is falling, it means that other currencies are gaining ground, and sort of risk on trade is on. So you will find that whenever dollar index is falling, emerging markets are doing very well, although they are not represented in that basket of currencies. But it means that money is flowing out of US dollar and going into other risk assets. So whenever dollar index is falling, you will find that gold is going up. You will find emerging market equities are going up. You'll find other developed market equities are going up, currencies are going up. So it is like the dollar versus everything else kind of trade that happens. And of course, there are a lot of other factors also, but this is how you have to read the movement in the dollar index. Now, if you will notice, of course, you will not remember that we in India had the greatest two bull runs in the last 40 odd years. Was one at the time of early 90s, so about 85 to 92, which peaked in the Harshan Mehta peak. You can see the dollar index was dramatically falling in that time period. And then more recently, in 2003 to 2008 period, you can see that the dollar index was dramatically going down, and emerging market, especially India, was shooting up like anything between 2003 to 2008. And that both these dramatic falls have coincided with not only Indian indices going up, but Indian gold in rupee terms also going up dramatically. So 2001 to 2008, gold has gone up rapidly, and here also from 86 to 1992, I think gold has gone up. But overall, since 1973 to 1995, gold went up net in a big way in INR terms. Now let's come to more recent times. So you can see that between 2022-23 here, we've had in the last few months a nice rally that is building up on the Indian market, and the dollar index has been falling. The earlier episodes have been short, but if you will correlate them, you will find that gold as well as Indian markets have been going up. So now what has happened into this? Let's go into the more zoomed in version. Now here you are able to see that dollar was going up from 21 May till about October 22, and if you will superimpose Nifty was extremely stagnant in this phase. So Nifty was not able to go up when the dollar index was rising, and only once the dollar index started to slide down has the Nifty gone up. And now what is happening? What needs to be appreciated here is that there is a head and shoulders pattern forming on the dollar index, and this huge support of 101 on the dollar index seems to be giving away. So once we are sure that this is going down, it will go down very dramatically over the next few months, and it may even go down to maybe 90 levels, or if this HNS pattern target is to be believed, it will go down to even 85 levels, which would correspond to somewhere here. I've also marked it here. So if the dollar index comes down to here, I think a huge amount of gush of money will come into the Indian market. Forget about valuations, we could go anywhere. And the same will happen in the gold market also. So these are very, very positive and, you can say, out of the general picture boosters that are already available in the market. Do watch out for this dollar index moves. I think we are on the path to a good rally on equity and gold. But let's see. Let's keep our hopes together and hope that this correlation, inverse correlation, will play out very well again. So read up more about dollar index. Do send your comments about it. How you like this content. Please contribute your knowledge to it also. I don't claim that I know so much about it. I also, am a habitual reader. I read about things, and then I try to share whatever I have learned. But I am only scratching the surface also, like you. So thank you so much for watching this channel. Do give it a like or a subscribe if you find it worthy, and do share it with your friends. Thanks. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.